Welcome to the Twomey Stock Market Report. I'm James Twomey, and today is Wednesday, January 25th, 2023. So let's do a quick market update. What transpired as we woke up to a very down market. Microsoft came out with earnings, and that pretty much put a hole into the initial start of the day. So what are we going to go over today? Well, first off, go to the website Twomey Stock Market Report is at the number 2 mestocks.com. Right there, you'll see the newsletter tab on the front page. Open that up, and that gives you the last weekend's report. It's 21 pages of fundamentals, technical analysis, and market insight. And that'll give you kind of a breadth of where the market is headed, where we've been, but also, two, how to do some analysis on the market. What are we going to talk about today? Today, very important, the SPY, or the S&P, tested the 200 EMA. Now, that's exponential moving averages. A lot of people use moving averages. I happen to lean towards the EMA, exponential moving average, puts more weight on the more recent data. And we're going to talk about some of our ads and other areas that we want to look at. And are we still in reactive trade mode? So let's go right to the charts. What's important from a technical perspective? Here's the long, it's a messy chart. I understand that, but this is the SPY, which is what we use as our proxy for the S&P. It gives us a general breadth of the majority of stocks. And we've talked about many times, there's been a downtrend from 2022. These are the red lines, right, as we extend those back. And every time we hit that, I'm repeating myself, but every time we hit the upper red trend line, we come back and create a new low. What transpired at the end of last year is we eclipsed that, or came up to that 200, the Twomey trend track line, the red, the upper trend line, we crossed and hit the 200 EMA. And every time we hit this 200 EMA over the past year, even though we went over it a couple of weeks earlier in the initial bear market start, March, April, it went to a new low. And it certainly did that eclipse where you had that summer bear market rally. It just sneaked over the 200 EMA for 4 or 5, so, about a week and a half, and then we crossed below it and we hit a new low, and actually 2 new lows, right? So now we got up to this 200 EMA about beginning of December. We went up to the trend track line and we cascaded downward, and then we tried to do the break one more time, and we cascaded down even further. So, higher high, but a lower low. But the difference this time is we really only came about halfway back into that, not even into that trend track line, and we proceeded to head back up. And we hit the upper trend track line, we hit the 200 EMA, and we've been saying right along, if we can maintain breadth above the 50, which is this red line, and above the 200 for an extended period of time, we're gonna have a much more higher probability of being bullish in the first half of the year, or the first quarter anyways. And what's important here, I'll highlight this 50 EMA again, it's getting more narrow to the gap between that and the 200. If we can potentially cross the 50 above the 200, that's what they call the golden cross. And if the moving averages follow suit, that's usually a more bullish sign from a technical trader's perspective. It's not the end all of everything, but it certainly is a more positive breath in the market. The diamonds or the Dow has done that so far, but the market pays more attention to the S&P because it's got 500 stocks, right? So that's where we're at. So what happened today? We came in at a very low. It hit some of our short-term technical, but it didn't go below. It kind of briefly went below the 14, but now we closed above the 200, which is at 397.97, and we closed at 400.3. We also, if we're going to expand this quite a bit, there was a tremendous amount of volume the last 4 or 5 days, and in this case, a 4th day of red green volume. Our MACD is very wide. It is widening and it's still positive, 2.81. Stochastics, it's interesting. It's opened up low, but it still managed to close at 90.39. So what is that telling us? It's telling us that we are testing this upper range, number one, obviously. Number two, we've been able to stay above it the last 2 days. And what was more important, today we opened up down. We had bad news. Usually what happens, some type of bad news ignites the sell-off and we cascade down. Similar to last week, Goldman Sachs came out, negative numbers. We had 2 days of very deep selling, and then we rebounded Friday of last week. So this is promising. And the other part of that is because the NASDAQ or the tech sector or the high growth sector has been leading this year to date charge over 6%. And the Dow's been, I think it's less than 1%. So that is very positive. We obviously can't declare victory on one day, but or a day and a half. But what was promising today, we beat those particular day start with bad news. So hopefully it will go on further. The other thing is we did add, we sent out alerts adding another dividend play, 11.5% JEPI, JP Morgan Equity Premium ETF. We also added, you can see the market shifting. AMD, after good news and earnings, we've expected a sell-off. We got in at a nice entry point. Goodyear Tire, we are re-entering that as well. So Goodyear Tire, we got out before the major downdraft, but we, kind of came out even on that. But, they had announced today that the SEC is looking into how they handled their tire recalls. So, the bad news on that. So that kind of drove the stock price down. We got in at a nice low rate there. So what do we do? TLT managed to kind of rebound a little bit today. It's the 200% version of the 20-year Treasury ETF that rebounded. We've been in it from off and on the end of last year and the beginning of this year. It's not robust and taking off, but it's still positive returns. The small cap, we still have our last third. That's up 3.5%. The tech sector, XLK, we changed our stops. We alerted subscribers, so take a look at that. 4% gain there. We still hold all of that. The Analytic Capital Management, NLY, that's our dividend play for 15.9%. We have a 1% there, but we're looking for a long-term hold if we can to get that dividend play for the year. That would be tremendous. But the year is early, right? MGM Resorts, that's 6.4%, if you will. We did change stops on that. XLI continues to be a struggle for us. We did change the stops on that, but we managed to hold the second half of that from that original entry. We're going to try to hold on to that, and we expect the industrials, if the market continues to somehow rebound in the future. EFA, that's the Latin America, the Europe, sector fund, ETF 3.88. Borg Warner's holding at 6.3. We changed the stops on that. So take a look at that. XLB Materials, it's hanging in there. That's active. We did do a stop change on that as well. American Pipeline starting to reignite. That's up at 5.2. Add at 11.8 or lower. We want to keep adding to that, nibbling at that near our entry price or below. Our stop is slightly below our entry price. XLE is hanging in there. CPG that we added, that's a dividend play to some extent as well. We have a stop on that. And then iShares Latin America, that's starting to ignite again, 5.2. That's also a dividend play. I don't have stops in that at this point. Just put your stop on first half, let's say, at 24 and hold first half on at 24 for now. Okay. We may change that and just, we'll alert you when we do. And then JP Morgan, the equity premium dividend play, you can take a look at that. It's got things like Raytheon, Exxon, a few other, high yield, big company type plays. Should be very stable, but you never know, right? In this market, we got in at a very favorable, and it's holding good. We don't expect a rapid movement up or down on that, but it does have an 11.5% advance micro. We've got back in on the pull in today. We got that out this morning, and we've got a stop in for that. That's already up almost 3%. The mutual funds haven't settled yet today, but we are back in the green on those as of yesterday, and we expect them to be a little bit pop on that today. So things are progressing where we'd like them to. We had to test today. We're going to hold our positions. We're going to add where necessary, so take a look for the alerts. And more to come, obviously. One day doesn't make our stock market, as we know. And any questions, email me at info@TwomeyStocks.com. I am James Twomey. This is the TwomeyStocks.com report. And go to our website, the number 2MEStocks.com. Pull down our newsletter, and you'll get additional detail on some of the things we're talking about. Have a great day. We'll catch up as soon as we have more updates coming.